Welcome to Bloomberg ETF IQ. I'm Scarlett Fu. Let's get to the biggest stories right now in the more than $12 trillion global ETF industry. Michael Sonnenschein steps down as CEO of Grayscale after helping build the firm into one of the world's biggest crypto asset managers. And another shakeup in the industry, Vanguard appoints BlackRock veteran Salim Ramji as its CEO, naming the first outsider to lead that firm, I should say. And physical commodities like copper and gold are making new highs. In just a moment, Kriskey, Invesco's commodity strategist, joins us to discuss the big metal rally. As always, though, Eric Balchunas from Bloomberg Intelligence is here with us, and he's looking at weekly flows. What do you have?
Scarlett, thank you very much. Look, the weekly flows are pretty good, if you're a bull at least. If you look at the top of the leaderboard here, as you know if you watch the show, we have the trading crowd and we have the buy and hold crowd, right? SPY and the Qs are trading crowd favorites, so they're into it. So a lot of the hot money has bought into the market. Those are pretty big flows. That's $5 billion between them. And then right below you have VU, right? That's the Vanguard bid. That's typically relentless. You always see that. But to see SPY and the Qs on top, that's a good sign. And then HYG, which is like a cherry on top because that's junk bonds. That's also a trading crowd favorite. And then VTI is Vanguard as well. One note on VU, look at the year-to-date flows, $36.7 billion. This thing's probably going to break the record. $50 billion is the annual record for a single ETF in a year. It's already $13 billion away from that. Amazing stuff with that one. Let's look at the outflows. Now, the top of the list is this random MLP ETN. Somebody clearly sold out of it and went to a different one, so not really sentiment-based. And then Soxol is semiconductors. That has seen outflows. That's interesting. People taking profits there. IWM, again, it got started and then it just unstarts. That's been the case for small caps for a long time now. And then a little money coming out of TQQQ as well and some treasuries. But, you know, one thing you don't see on any of this is gold. You know, whether inflows or outflows, it's interesting to look at commodities sometimes. Gold, as mentioned earlier, is doing really well. Well, it's finally starting to get some flow. So I looked at the 1 week flow of all the commodity ETFs out there. And you can see here, 509 million is pretty good. And you can see the rest are pretty good. And these are all gold ETFs. So GLD, GLDM, which is like the mini-me that's cheaper. And then IIU is also more retail. And look at the returns here. So much better than the stock market this year. Silver junior miners, if you really want the hot sauce there, that one is 27%. Some people buying into that, but most people are going to buy these old gold ETFs. Oil even doing good at 15, but not as much flows there. So, Scarlett, look, gold's been doing well for a while, but the flows haven't been there. Still negative $4 billion even with that, but finally starting to get some looks.
Okay, so maybe we'll see if this will be the beginning of a new trend. Eric, thanks so much. Joining us with our conversation now is Kriskey. She is Senior Commodities ETF Strategist at Invesco. Kathy, it's so good to see you.
Great to be here with you guys.
So we have record highs in stocks, if you zoom out, and we also have record highs in metals like copper and gold, albeit the flows into gold ETFs have not been as strong as you might think, as Eric was just showing us. What does that tell you? What's going on here?
There's so much going on. And just let's touch on gold initially, right? Because what made gold prices go higher? It really was emerging market central bank buying, right? It wasn't ETFs, right? Because the ETF buyer usually looks for the Fed easing, right? And now we know that's delayed. And also, you know, some of it is the safe haven, right, for those investors. But it was very different. For the emerging market central banks, it was de-dollarization, plain and simple, right? And there were, you know, led by China, but a lot of other markets like Poland, Turkey, Singapore, like Qatar. There were a lot of other countries that looking to de-dollarize, right? So that, but we kept getting the question, where are the ETF flows? And remember, we saw outflows, Eric. You were pointing that out like weeks ago. Outflows instead of inflows. And so, and it was plain and simple profit taking. I was actually in Europe last week, and I was in Zurich, and some of the funds, they asked me that question, like, why were ETF people selling? And I said, I think it was profit taking. And he's like, good answer. It was a trick question because they were one of the ones selling, right? And so they said they'd owned these gold ETFs for decades, right? And they're like, okay, at 2,400, it's a sell. But the other story I think is really cool is copper. So again, it is one of my pet favorites because we've been talking about it for the energy transition for so long. But now I think that we're shifting to that AI story, these data centers that need so much power, right? And this whole electrification that's going on and these grids needing more copper wiring, plain and simple.
So let's say somebody is listening to this and they're like, you know, I'm sold on the copper story. You know, how do you actually invest in copper, right? Do you buy the futures or copper stocks? in your big ETF, which is PDBC, which basically bundles together a lot of commodity futures, it's so overweight energy and oil. Copper is what, 7%? So do you still go broad, or do you want to hone in and just buy a copper ETF or ETN?
So now, even though we're all like institutional investors very often that come to your show, we're also retail investors personally, right? And so I think we have a product, DBB, Delta Bravo Bravo, that's equally weight copper, aluminum, and zinc. And yes, I like it. I like it for a lot of reasons. But you're right, the problem with us as retail investors is we chase things, right? And so if there's nothing anyone remembers but what I say is that don't chase it, and that's why I do like broad-based commodities, like a PDBC, because you get everything. Remember those Prego commercials, like it's in there? And so it's the same thing with PDBC. It's broad-based, right? You're getting coverage for all the different commodities. And that's one of my other big themes is this is a year of uncertainty with all the elections and the crazy weather and the geopolitics and some of the macro, like central banks easing, not easing, whatever's going on. And I feel like when we feel that there's so much uncertainty, what do you look to invest? And the answer is commodities. And that's why I know it's hard for retail investors, because they want to chase, right? The geopolitics pushing oil up or gold. But if you can just give that 5% allocation to commodities and get broad-based and sometimes target things like, but generally do not chase commodities. They are volatile. Usually the commodity will come to you. So again, in Europe last week, talking about industrial metals, everyone said, literally, I think they were on their phones buying it as I was speaking. And so I said, no, wait, right? 1100 LME copper is pretty high. I think we need to wait.
I like that idea. Let the commodity come to you. One thing, though, about commodities, and this may be the case whether it's a retail investor or institutional investor, is that commodity markets tend to overshoot a lot. Why is that?
Well, because we're volatile and we get overexcited and we're like, okay, this is a great time. I mean, some people have come out and said they've never seen such a good time for copper. This is the second bull market in a century. And they want to be in it. And so everyone overdoes it and then it pulls back. Again, that's the problem you have. Right. And so we get overexcited. But I think copper's long-term is higher. It is a great long-term hold, but I don't know if you buy it at its historic peak.
Jeff Curry called copper the single best long trade he's ever seen. Jeff Curry, formerly of Goldman Sachs, longtime commodities watcher.
Yeah, it's interesting. Copper is in some ETFs. Another one that you have that I was interested in is the electric vehicles metals.
EVMT.
That is novel. No K1, by the way. That means the tax form. And you look at here, and you look at this ETF, and you're going to get copper, nickel is 39% of this, aluminum, lithium, cobalt. Is that weighting in the exact demand from electric vehicles? Because I thought lithium would be higher.
Right. So it actually has caps on illiquid commodities like cobalt and lithium. But you're right. It's supposed to mimic what goes into an electric vehicle, hence that ticker EVMT. But, and I actually, again, I love EVMT right now, too, just because I think nickel is the other sort of story that it came down so much last year. But this year, year to date, nickel has got some decent returns. And that's why I think EVMT is already 12% up year to date.
Yeah, nickel, of course, has been climbing on concern that the unrest in New Caledonia will possibly disrupt supplies.
Exactly.
To what extent do you think this is an excuse for nickel to just play catch up with the other base metals? Because you talked about that big sell-off last year.
So usually nickel is not at the top of my list because there's a lot of cheaper, lower quality nickel coming out of Indonesia, and we didn't think it could be used for batteries, and now people are developing it. So I was a little worried we would have an oversupply of nickel. But I think that story is sorted, and as you said, there's country risk, and I like it. And that's why the EVMT, it has the highest weight to nickel because that's the biggest commodity in the electric vehicles. But I like the whole suite of products.
All right, Kathy Kriskey, great to have you on. Kathy Kriskey is commodities strategist over at Invesco. Now coming up, Grayscale CEO Michael Sonnenschein stepping down. We discuss what this means for the future of Grayscale, as well as another CEO shakeup in the industry, Vanguard appointing Salim Ramji, formerly of BlackRock. Here's what he had to say on this show back in July.
In every period of volatility that we've seen and observed over the past 10 or 15 years, ETFs tend to do better. Investors are always looking to rebalance and come out of things that are perhaps less efficient or less tax efficient and move into things that are more transparent, more convenient, more efficient to do business in.
Welcome back to Bloomberg ETF IQ. I'm Scarlett Fu. It is time now for the ETF Brief, where we highlight stories and trends that caught my eye. We start with thematic ETFs. There is evidently not a whole lot of appetite for these products, despite there being several standout investable themes across equities. You've got AI, you've got the economy around weight loss drugs. You even have the return of meme stocks, but as you can see, declines for the last couple of months. Now, when it comes to those meme stocks, chasing high volatility returns got a brief pop for a few days last week before fading. Many retail investors are instead piling into the new alternative ETFs, such as spot Bitcoin ETF funds. Or I shouldn't say ETF funds, that's redundant. And that brings us to Michael Sonnenschein, who is stepping down from Grayscale effective in mid-August. His legacy at Grayscale will be likely tied to GBTC and Bitcoin ETFs. This is what he said in January after the official approval of spot funds.
Making the decision to sue our regulator, to have that unanimous victory in court, and to then all of that come to fruition and actually have GBTC uplist on New York Stock Exchange as the world's second largest commodity ETF is just such a historic moment and such a milestone.
And Sonnenschein is just one of the big people moves in the ETF industry, because the other is the announcement that Salim Ramji will soon head up Vanguard. Let's talk about both with Bloomberg's Sonali Basak and Eric Balchunas. Sonali, let me start with you. When it comes to Michael Sonnenschein, do we know why he's stepping down?
We don't know really why. What was interesting, according to the Wall Street Journal report, was that they were looking for a new CEO since the end of last year. And so this is pretty surprising that this didn't leak any time in that point, especially because we know Grayscale at that point was looking to convert their trust into an ETF for the Grayscale Bitcoin Trust. They're also launching new products. So fascinating time to watch Michael Sonnenschein step down and bring in somebody who's not from the crypto native community, but from the regular way asset management community.
If that's true, because they've seen $16 billion in outflows from GBTC. That is the most any ETF's ever seen. It's kind of got to be rough on the culture there to see outflow after outflow, especially since they got the ETFs born anyway because of their lawsuit. So I have to think this is like firing the head coach and hoping that the new one comes in and does better. But with a 1.5% fee, how much can they expect to turn this around?
So to your point here, too, they made a bet, and it was you saw it. Michael Sonnenschein, time after time, went up there and said they would take that bet. They had such a large trust here by assets that they kept the fees high because they could bring more in on high fees anyways. And to your point, they did experience those outflows, but you had to bet some of that would happen anyways, given those lower fee products. Now, beyond that, if they were looking before the conversion even happened, the question is, what are their grand ambitions here? The guy they're bringing in, Peter Mintzberg, comes from Goldman, head of strategy there at the asset manager, and this is roughly edging on, we always bet it's going to be about $3 trillion, Goldman's asset manager, by the end of this year, but not heavy on ETFs in that $3 trillion asset pool nearly. So definitely change in strategy when you look at the new CEO here at Grayscale.
All right. Some people to watch certainly over at Grayscale. Let's talk about the people to watch over at BlackRock, Eric, because Salim Ramji will be the new CEO of Vanguard. Do you think he'll stick to the Vanguard, and in this case, Jack Bogle script, or was he hired to, I don't know, pursue big, ambitious plans, as Sonali had put it, and make Vanguard more like BlackRock?
Yeah, I think a little of both. If you've ever talked to him, he's been on the show. He's a true kind of indexing nerd. He loves indexing, loves giving access and low cost. I think he won over the hearts of the Vanguard board with that. But his experience is running ETFs. Mm-hmm. They launch all kinds of products. They launched the Bitcoin ETF. They're edgier. He was, his product line was edgier than Vanguard. So I think there could be some incremental steps forward, but I don't think any wholesale changes. Vanguard's 50 years old. You are not going to overturn that culture or cult, as some would think, that quickly. But I think he'll leave his stamp on it. Hopefully, customer service. That's probably one of the things they need the most help with. With flows, the fish jump in the boat. All you got to do is not do anything really, and you'll still take in money. Yeah,
you could be passive, and money will just flow into the coffers of Vanguard. So. You mentioned Bitcoin and how he played a big role in launching Bitcoin ETFs for BlackRock. Do we presume that Vanguard is going to launch Bitcoin ETFs?
No way. That's a bridge too far. I think even for current Vanguard, who has definitely moved away from Bogle, I think what they might do over time is lighten up a little bit and maybe let the Bitcoin ETFs trade on their platform, because they have a whole ban, which is weird. But they let gold ETFs trade. and there's not that much of a difference. So I think over time, maybe they'll lighten up a little bit, because Salim oversaw IBIT, and he was on LinkedIn saying how proud he was. So he might have to just like bury that part of himself for a little while, and then maybe over time, as Vanguard evolves and time evolves, maybe they'll do something. We'll see. It'll be small.
All right. We'll continue to keep an eye on both gentlemen, whether it's Michael Sonnenschein or Salim Ramji. Sonali, Basak, thank you so much for joining us. Still ahead, we're going to drill down into Bitcoin ETF buying with Chad Coehn. He is CEO of United Capital Management next. This is ETF IQ on Bloomberg. This is Bloomberg ETF IQ. I'm Scarlett Fu. It's time for today's drill down, where we focus on one ETF. Eric, what do you have?
Scarlett, today we're going to look at the Bitcoin ETFs, because we just went through the first 13F season with them, and the amount of 13F filers that showed up was ridiculous. We're talking hundreds. Normally an ETF gets 5 or 6 if they're lucky in their first 13F season. These are in the hundreds. So here's the Fidelity Wise Origin Bitcoin Fund Spot Bitcoin ETF. I think a lot of people know this at this point. Look at the assets here, 10 billion. That's a lot of assets for only being a couple months old. The fee says 0, but that's really just the waiver. Once the waiver's over, the management fee will be 25 basis points. That's still very cheap. Most of them had been over 1% in the rest of the world and other vehicles. So the ETFs here in the US are very cheap. Let's look at the 13Fs of this fund. And our next guest is in here. You can see there's big hedge funds in there. Whether they're going long or arbing, we aren't totally sure, but they're definitely involved. That's probably good for liquidity. And then here you have some advisors, right? So United Capital is interesting to us. They're in Kansas, in the heartland, and they bought the FBTC. So you look at many examples of these advisors, and it's interesting to see how many of them are going in and why. And now one reason they're going in, I think, is the performance. Let's look at the returns of FBTC this year. We talked about gold earlier on the show, GLD, and how good of a year gold is having. But if you look at FBTC versus gold and, say, the stock market, you would see that FBTC is outperforming. Here's the chart here, 44%, right? And that's stocks, it's gold stocks, and that's bonds. So, you know, almost 3 times more anything else. That definitely helps. So, Scarlett, you have good performance, a lot of liquidity, and cheap fees. You are going to get bites, and that's what's happening here.
Yeah, as long as that white line stays above the orange, yellow, and red line, things are looking good. All right, Eric, thanks so much. Joining us now is Chad Coehn. He is CEO of United Capital Management in Kansas to talk more about FBTC and Bitcoin with us. So, Chad, why are you going in on Bitcoin through these spot Bitcoin ETFs? What role do they play, does it play in your portfolio?
Wow. Is that how much time do I have?
20 seconds. Just kidding.
So, you know, how we got here, 3 or 4 books that I could reference, you know, going back 10, 15, 20 years ago. Here in the Midwest, we're kind of, we like real assets, gold and silver, things like that. And so it kind of led us to reading about Bitcoin. We were reading about it when it was 5 to 8 cents. And I would bark at the young men and women in my office and say, hey, figure out how to get me some of that, you know, put 3,000 in there, whatever. And they came to me. I remember it was right around $100. And I don't recall whether they were buying it from a Bitcoin miner or directly, or if it was when the Grayscale trust launched. I don't remember that, and don't remember the exact year, but I guess I could look back. But I'm like, we missed it. So ended up buying, into Grayscale, not at $100, but when it was about at $600. And then we, kind of bought and sold it like we would a stock. And I know a lot of our clients owned 1 or 2 at the equivalent of Bitcoin being around 2,400. And then right before COVID broke out in early 2020, I met a gentleman that I called him for a software build and started talking about all this Web3 advancement and technology from a Web3 standpoint. And
right.
Bitcoin was trading around 3,000 at that point. And, most of all that we bought from that point forward, we kept, and we did it through the Grayscale Bitcoin Trust originally. And so we've been accumulating since 2013, but more so, really, our best start date's February 2020 from there forward.
And so I can see behind you picture of burning money. One of the cases for buying into Bitcoin is, in the narrative, is that the dollar is devaluing, right? And so this is a way to have more real return. Some people have called Bitcoin the Second Amendment of money, protecting you from your own government devaluing the currency. Is that how you see it? Are you all in on sort of that mission? Or is it more, again, like trying to just get returns any way you can, and this is something that can offer that to you?
No, we're all about that. Can I reference a book on this show?
Sure.
When you get, years ago, when you get handed a book by one of your clients here in the Midwest called The Creature from Jekyll Island, and books like The Sovereign Individual and The Future of Money, that's what led it to us to this. And so I'll tell you something funny I do with my interns every summer. They come in and they're all nervous about working here, and they get to come into the big boss's office, and doesn't take them very long to realize I'm not that serious of a person and joke around a lot. But I look at them and I say, you do realize if you come to work at United Capital Management, you will retire billionaires. And they look at me with big eyes and they're excited and take me for the truth. And then I go on to say, and your sister better be a billionaire, and his neighbor better be a billionaire, and on and on and on. And the real math on that is, if you $2 to $3 million is comfortable today to retire, to accumulate in retirement assets, it's probably going to be closer to 20 million by the time they retire, whatever the math is. And so that's kind of how I start out the conversation. And
Right.
I'm really shocked. We've had students from all over, at least the Midwest, University of Arizona, Nebraska, and of course the Kansas schools, K-State. And to me, 2008 and 9 and COVID is not even being discussed in these colleges that I can see, at least the interns coming in.
Yeah.
The money being printed, I guess they look at it as a black swan event.
Right.
And I kind of look at it as we're going to be printing money to eternity. And
Yeah.
so I look at Bitcoin as
Chad,
a solution.
We got to leave it there. Chad Koehn of United Capital Management, and we'll be back next week on Wednesday, May 29th.